Muhammadu Buhari on the 31st of December 2021 signed the 17.127 trillion naira budget of economic growth and sustainability into law. And that's with a pledge to improve the general living conditions of Nigerians. All these are subject to the rigid implementation of the budget. And further breakdown of the budget also indicates that the public service is all set for some reforms. We would digress a little bit as we talk about agriculture. And this sector definitely requires irrigation to improve production level. What is the federal government doing to achieve this? This is our focus on Business 24 this week. I am Comfort Amadu, and our complimentary segment is also part of this package, and export tips as well. That's right after this break. Welcome back. Now let's go straight to the business of the day, as the 2022 budget is expected to further celebrate the recovery of the Nigerian economy and facilitate the completion of critical projects, as well as improve the general living conditions of citizens. Minister of Finance, Budget and National Planning Zainab Ahmed, while giving a breakdown of the budget, pointed out that it reflects the key execution priorities and strategies of the National Development Plan 2021 to 2022. Let's now join Leah Katumba Batunde as she takes us through Nigerians' income and spending plan for this year, 2022.
The 2022 budget signed by President Muhammadu Buhari late last week had some key changes made to it by the National Assembly that include an upscaling of benchmark crude oil rate. This is in line with forecast by the World Bank and the Organization for Economic Cooperation and Development, OECD. The key assumptions now have oil price pegged at $62 per barrel, with an expected output of 1.88 million barrels per day, an expected GDP rate of 4.02%, inflation 13%, and an exchange rate at 410 naira 15 kobo to the dollar.
The National Assembly had maintained the proposed volume of 1.88 million barrels per day, including condensates, in the 2022 budget. And this means that the executive and the legislature must push the oil and gas sector to attain these production volumes.
The projected aggregate revenue available to fund the 2022 budget of 10.74 trillion naira, inclusive of government-owned enterprises, is 32% higher than the 2021 projection of 8.12 trillion naira. Without the government-owned enterprises' retained revenue, the federal government revenue is projected at 9.01 trillion naira. Aggregate expenditure inclusive of government-owned enterprises and project-tied loans is projected to be 17.13 trillion naira. Recurrent non-debt spending is estimated to amount to 6.91 trillion naira, and aggregate capital expenditure is 5.96 trillion naira. At 3.61 trillion naira, debt service is 21% of total expenditure, while overall budget deficit is 6.39 trillion naira, to be financed mainly by borrowings.
Government will continue to create enabling environment for the private sector to increase their investments and contribute more significantly to job creation, to economic growth, and to lifting millions of our citizens out of poverty.
Critical allocations in the budget include 1.234 trillion naira to the education sector, 876.38 billion naira to the health sector, defense security, 2.29 trillion naira infrastructure, 1.42 trillion naira, as well as social development and poverty reduction programs, 462 billion naira. The budget will run along with the Finance Act that focuses on 5 key areas: domestic revenue mobilization, tax administration, legislative drafting, international taxation, financial sector reforms and tax equity, and public finance management reforms.
All right, in the year 2022, there will be some real reforms in the public service. And Minister of Finance, Budget and National Planning Zainab Ahmed, while responding to issues in the economy, says government is harmonizing recommendations that will include the Steve Oronsaye report. Leah Katumba Batunde again has the details of this report.
The year began in top gear as economic activities resume full swing, but there has been uncertainties about removal of subsidies, particularly petrol, with labor unions already warming up for action. However, they might have to wait a little longer.
We made a provision for fuel subsidy from January to June. And that means from July to December, there's no provisions that we made from fuel subsidy. So our assumption is that by June, we'll have been able to walk through a process together with all stakeholders.
The military pensioners had earlier protested to the gates of the Ministry of Finance over exclusion in upward review, but the minister shows that the 2022 budget has captured 24 months arrears for them. The national budget, she reveals, is wholly being linked to the National Development Plan, and in planning discussions are on for a national census this year to update the nation's population database. There is a broad range of changes coming that involve review of salaries, review of government agencies, and employment generation.
What we want to do is to reduce the size of government and also to reduce the size of the personnel costs. And part of it, of course, will be designing exit packages that are realistic.
In boosting income and ensuring a healthy business environment, the strategy this year involves working with states on their relevant laws to avoid duplication of taxes and increase non-oil exports for revenue.
And if Nigeria must grow what its citizens eat and meet the food security it desires, the production level has to be multiplied. And the government of the day seemed to not only have come to terms with this reality, but has also factored into the national irrigation policies being championed by its Water Resources Ministry. Musba Dan Wahab reports on the value added to the irrigation sector in 2021.
It's dry season, but then pre-germinated rice seedlings are finding suitable place on the wet field of Hadejia Valley Irrigation Area in Jigawa State. No magic, it is the fringe benefit that irrigation presents. Planting season multiplied, and this group of farmers can be sure of multiple harvests. The 4,050-hectare Hadejia Valley Irrigation Project is part of the 15,116 hectares of irrigable facilities rehabilitated and recently handed over to farmers across 5 locations under the World Bank financed project Transforming Irrigation Management in Nigeria, TRIMIN. But then, that seems to be a tip of the iceberg.
When completed, the intervention will add over 42,000 hectares of land into the existing irrigation area and reduce the hazard potentials of existing dams. About 625,000 jobs are expected to be created, while 520,000 additional tons of rice and other cereals are estimated to be produced annually.
The 786-hectare Gari irrigation project in Jigawa, 3,070-hectare Midurima project in Sokoto, ongoing rehabilitation and expansion of Adani projects in Enugu, 3,000-hectare Lower Ogun irrigation projects are just part of others also concurrently contributing to the pool of irrigable land across the country.
What we have now is about 157,000 hectares developed, out of which 107,000 hectares is being cropped.
Close to about 80 or 90% of our irrigation facilities are abandoned. So I must give it to this current administration for them to have been able to resuscitate.
Despite these achievements, the existing irrigable land is just 5% of the potential 3.1 million hectares irrigable in Nigeria.
My name is Ayogo.
Ignatius Ayogo, in his 15th year on other rice farmland in Uzowani, local government area of Enugu State, is nostalgic about his irrigation experience and can't wait for the completion of the rehabilitation work.
If we renovate it, we go enjoy. 2 times yearly we harvest. No money, we no go lack money. If you harvest, you plant another one.
Like Ignatius, other farmers and prospective ones are looking ahead with optimism to multiply their yields to contribute to Nigeria's path to food security.
And a lot of resources has been committed to export in Nigeria, and the tide is changing, no doubt. However, how do we sustain the gains? These tips should help you.
So today I'll be giving tips to small businesses that are interested in participating in international trade. And here I'm talking about export. We have a couple of small businesses that have interest actually in entering the export market. Now, these are just tips. The first I would say is, one, you need to be a registered business. You must be legally registered. So how many of you watching this right now as a small business, even if you're a startup, how many of you are legally registered with the Corporate Affairs Commission? It's very important that your business is registered if you are to participate in export. Secondly, you must also obtain a license, an export license from the Nigeria Export Promotion Council. It's very key that you have a license because that also gives you the permission to export, and then you are traceable as well because your name is on record in your own country as an exporting company or an exporting SME. So it's important as well that you are a tax-paying SME. Now, many of our small businesses still don't understand what tax really means and how they can actually pay taxes. Now, this is something I'll give you an assignment on. You need to find out how you can begin to, get tax compliant, even as a small business. It's very important. And it's important because your buyers, those that are outside there in other countries, they value the fact that you are also compliant in your own country. How is your online presence like? Do you have a website? Can you be found easily by those that want to buy your products? That's a good question. I've been to some websites, and what I see there is nothing to write home about. So if you want to start exporting either products or services, you need to have a lovely and functional website. And when I say functional, I mean your products must be well put there. Your services, anyone that is browsing your site should be able to get information. And while they're getting information, it's also important for you to translate some of the things you have on your website in other languages. Imagine this. Someone from an Arabian is looking for a product that you sell, or a product that you have on the market. And let's just assume that he cannot really read English. Or perhaps he's a Japanese or some other tribe, and he cannot read English. He should be able to check your website and also find that information in other languages. There are services like that. Now, don't forget, I'm talking to a small business or an SME that is interested in export. And these are the requirements of the international market. You must be able to interpret some of the content on your website so that someone that is visiting it for the first time is able to get the information in their own language. So I give you that challenge as well. Try and explore that.
NTA News 24 broadcasting from Abuja. You can watch us anywhere, anytime on the following platforms:
Star Times Channel 101, Free TV Channel 79, DSTV Channel 419, and Gold TV Channel 46.
For more information, log on to our website www.nta.ng or join us on our social media handles: Twitter at NTA News 24, Facebook at NTA News 24.
For comments, suggestions and inquiries, send an email to news24@nta.gov.ng or call us on the following numbers.
NTA News 24,
news and more news. All right, let's get the review of the capital market as the first trading week of the year has ended, and Professor Uche Owaleke is waiting to do justice to that. Prof, how did the market do?
The week has been a green one, quite eventful. Opened on a positive note. We recall trading began on Tuesday, so we had 4 days of trading, and all through the 4 days, the equities market, appreciated. It has closed today in the green on a positive note, at coming in at 0.57%, and week on week, you now find that we have recorded a 2.65% gain or appreciation. You also recall that this positive momentum actually began the previous week when the market gained 1.0999%. So I would say the positive posture, has been maintained. This week, the all-share index crossed the 43,000, if you like, psychological mark. Market cap has also been growing. This week, the NGX, as a Nigerian exchange, listed Boa Foods, by way of introduction. Of course, Boa Foods received after meeting all the requirements of the NGX in terms of listing. We saw activities in stocks like UBA. We saw Airtel Afri, and of course the industrial index powered by Dangote Cement. And then the consumer goods index also ended, on a positive note. I would say all that is happening is a reflection of the enthusiasm that usually associated with the beginning of the year. Investors are enthusiastic, especially against the backdrop of forecasts, that have been made. The World Bank, the IMF, both have revised upwards, their GDP growth forecast for Nigeria. And if you also look at the 2020 budget of the federal government, the government is forecasting 4.2% real GDP growth. So all of that, coupled with the fact that the budget is coming in time this year, the president has assented to it. So we expect that implementation will kick in in good time. So all of that, helping to create some sort of certainty in this space, and that's why you find a lot of investors, being positive in terms of market sentiment, and that you can also see, reflecting in the performance of the equities market. Market breadth has been positive. By market breadth, we mean that the number of gainers, has been more than the number of, losers. That's a reflection of market breadth. As I said earlier on, January is usually associated with such enthusiasm, and it's not only in Nigeria, even in other climes, and that's why you hear the January effect. The January effect is nothing but the fact that in many places the returns for the month of January, are usually the highest. For the if you compare that with the rest of the months. We also saw that in 2021. In 2021, January had recorded the highest return, if you recall, of over 5%. And we also expect that this month of January will end quite strong. I expect that the bargain hunting that is currently going on will linger into next week and then up till the end of January. So I expect the government, and I'm sure that is quite recognized, the government to focus more on implementing the capital component of the budget. The aggregate capital spending in that projected spending is represents 35% of the budget. That's an increase over what we had the previous year, and as a matter of fact, over what we've had for quite some time. So it's important that the capital component is given attention, because as you improve infrastructure, roads, power, rail, okay, they have a way of rubbing off positively, on the economy in general, and of course the market in particular. So I want to say government give attention to that. I would also want government to give attention to the agri sector. That's important because that's what will help to reduce the level of inflation we have in this country. Inflation rate at 15.4, you realize is more of food. It's the food components that is food inflation that is actually driving inflationary pressure. So if we can bring down food inflation, okay, inflation rate will come down. And if inflation rate comes down, what happens? Any return you get from the capital market, becomes meaningful, because investors are interested in positive, real returns. But if inflation rate is high and you're getting a return that is lower than inflation rate, then it doesn't make sense. Which is why it's important that we further bring down inflation rate. And the way to do that is to address this issue of food. The central bank has a lot of role to play. It has, of course, been actively supporting the food sector. It's important that all the interventions that we already have now, are scaled up to ensure that we have more food in the country in 2022.
That's Business 24 for this week. We do hope you had a profitable time. We will come your way again next week with another exciting package. Do ensure to connect with us because we'll be bringing you development from the world of finance, economy, and business. I am Comfort Amadu. I will see you soon.